No.
Anything you say.
No, I think that people market too black and white. Either you buy it or you sell it, and there's a lot of shades of gray in marketing, and that's this kind of market that we have right now is what I would use for my marketing.
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tungseth. He's John Prischmann. Well, John, we have a little rally going on in grains as of today, maybe even Friday, I guess, if you include some upward momentum from Friday into, we're recording this on Monday instead of Tuesday. We'll see what Turnaround Tuesday does, but is this the rally? We're now going up with no stop. Is this related to the seasonal we've talked about around October 1st? Is this just it's one-day blip?
It's very early for the seasonal to be going. It would be a full... This started in August, which is not uncommon to find a low in August and then retest that in September or take it out. What's uncommon is the 2 middle weeks in September, right about the 8th or 9th, is a very, very weak window, and we've seen nothing but strength almost every day. It is hard to believe that we're at, 10:02.5, I think, in November beans Friday morning, and for us to be near 1040 right now on absolutely no news other than it rained in South America, and they have a lot more in the forecast, the wet October. So you wouldn't expect this. I was reading a number of people looking for why this might have happened. You have the world vegetable oil or the world oil saying that palm oil is going to be 23% higher this year. You got to really reach in a lot of different directions, and you've seen that same market structure where none of the carry is coming out of the market. They might even add a carry again today. So you don't have anything on the commercial side that indicates we need beans up front. If anything, they're saying store it. And so you're moving up everything, including the back months. July almost hit $11 today in soybeans. We had a hard time holding those levels last year, really hard time holding 11 once it started breaking down. And it was more of a flat curve last year. This has max carry, and everything's moving up in a big block. Highly unusual rally. It does look like short covering that's intensifying. And don't underestimate how powerful that can be. I mean, especially in soybeans, when things get covered all at once, wheat and soybeans are two markets where it can absolutely explode, which is what we've seen today. Like, you start tripping everybody's stop, you start going over everybody's lines, and they start talking technicals, and then all of a sudden it feeds on itself until it exhausts itself. Now, is there something happening behind the scenes that could be going on? The one word that you keep, or the key phrase you keep hearing is, it's not as good as we thought once we got out there. It's very relative, though. I meant, you heard some of that for sure last year in beans, like all harvest long. It was never way better than we thought. There was a lot of average or it is slightly better than we thought, but no one said it's a bin buster last year. And it ended up being a huge crop. I think 51 in the end, and it looked like it was going to be 48. This one's already at near 53, so they do have a high water mark. That could actually come off, but we're still dealing with some of the worst numbers we've seen in beans on the world side of it. And then you're going to have the guys that say it's not out there. But again, the spreads, the basis, nothing is saying that it isn't out there. Field reports, everything points to this being a large crop. What this looks like is a marketing opportunity when it's done to me.
I just talked to a client on Friday who was asking me what to do with his old crop beans. He still had old crop and wasn't sure what he was going to do. And we talked about the seasonal with October 1st, that might be a good opportunity to get those out.
Yep.
And at that time, we had looked at options too. The 1050 option was only 7 cents on Friday morning.
Yep.
That was a rocket ship this morning.
Yeah.
I should have bought 10 of them.
Yeah, this is exactly, and I think I've talked about it pretty much every episode, my philosophy that we don't know where the market's going at any given time. Like when you're hedging, I tend to try to find strategies that have the upside open, yet cover the downside, and then try not to pay too much. That's That's what I like to do. It doesn't always work out that way. Sometimes you're just buying a put. But I think that guys market way too much in that black and white. Do I sell or do I hold? And that's it. That's their entire marketing plan, trying to figure out these tiny windows. Where I would rather buy a floor and then sell an upside to pay for that floor, so you have this window that you can be right in. And I do have a number of that going on in corn right now. And we want it to go higher. We're in the end, hopefully we're not going to pay anything for that put, but we want it to go higher in this window. And I think that the gray area marketing is much better than the black and white. Do I sell or do I hold on to it? Because you get these moves like this, it provides these opportunities, and it's still not apparent when or how high this could go. So I tend to favor those strategies that have the upside up, open to some degree, or wide open, and then have your downside covered. Any of the stuff I've done in corn is down slightly, but still, as long as it's in that range of air that you picked for your top side, and then your bottom side's covered, you're going to profit if it goes up. So that's what you're looking for here. Not all hedges are you cheering for your hedge to go straight down so you can make a pile of money. But this is still surprising nonetheless. But it is beans. It's surprising, but it's not surprising. They can do anything anytime they want. You couldn't give these beans away for the last year and a half, or like last year. And now it seems like we're going to run out when on paper we have about as many as we've seen around in a long time. But I still think that it's the same market that we're dealing with. A lot of beans around. Where are we going to put it all? And then hopefully the demand soaks it up. But that's a big question mark as well.
Well, and that's the trick with hedging, right? Like, this could be a great opportunity to get other hedges on, but we don't know how far up the market can go, right? We don't know where the market's going. So you could take an opportunity to get some hedged on this nice rally today.
Yep.
10 cents in corn, 25 cents in beans? I guess I didn't look at what it closed
at. Like 27 cents. Like this is one of the bigger days in beans that we've seen, in a year. And it's in the middle of going into the middle of harvest with the most pressure. So far we've seen zero harvest pressure at all from any of these grains. Some traders would say, hey, that proves that it's not out there. I think it's a little early to be saying that. I think there's plenty of everything out there. You are hearing, though, not as big as expected. And, you'll hear that often in beans. That's not uncommon. After what happened last year, I still have my doubts that the USC is changing its numbers anytime soon. We'll know a little bit more on the 30th. But all in all, a very interesting market. It's the pain that caused the most pain to the most people sort of rally. And markets like to do that. It can stay. Markets can stay irrational a lot longer than you can stay solvent. You hear that time and time again. Perfect example in beans. Looked at possible for it to rally after the Pro Farmer. Kind of said, yeah, this is one of the biggest ones we've ever seen. And it's basically rallied every day since that night. Open gap lower. And then that was the low within an hour or two after that report on Sunday night after the Friday they came out with that. Not surprising at all. The markets are mean, and this is a perfect example of something out of the blue against the sharply against the seasonals, and then going up when it looked impossible. And that's exactly what beans are doing, hauling everything with it.
It was definitely interesting to watch. I will say on that October for a seasonal, as I have paid attention to that the last 5 years, and it does seem like it moves earlier, and it's been moving earlier. So there's the possibility, even though it's a week ahead of that.
Well, it started in September 1st. It's been rallying. There's been very few down days. So I don't know that I've ever seen a September like this. It has been about a week earlier. Probably a lot to do with the quarterly stocks report, thinking that that's going to be bullish and short covering and all that. This one's new. This went up very sharply in 2 weeks. The previous 2 weeks, really. That is some of the weakest of the year, so it's doing something it doesn't normally do already. And then we're going to get into that insurance discovery period here in October, and that's usually when it really gets cooking, but it's almost always because they pounded it down all September and it's due for that rally. This one's not doing that. So you find seasonals are just that. They're seasonals, and this one's bucking the trend for sure. made a very early summer low, had nothing but bad news since, and is showing that it's very strong. I still think it's all short covering just by looking at the open interest and looking at the way this is all unfolded, but it's very powerful at the same time.
Yeah, I think this is where you'd want to start looking at some of those things, like what is the open interest doing? What are the spreads doing?
Yep.
Are exports picking up? Start looking at those things to see if this is something that will sustain, or is this a great opportunity to hedge again? Isn't that where we'd end?
Yeah, beans are very susceptible, or very sensitive, I should say, to the spreads, and they'll move very quickly when there's not beans in the pipeline to get beans in the pipeline. Unlikely to happen this year, but we're at near record carries in corn and beans up front. So to see a large rally with that happening in for them to keep that carry in the market, very unusual. But markets, they like to be like this, very, very, very tricky. And it'll be an interesting October now that we've rallied very sharply. Now the bad news is we were getting excellent demand at these lower prices. Now we quickly moved up, and we're going to be the highest price in the world very soon if we're not already today. Corn hasn't moved near as much as beans have. But, again, we'll get to that price where China will not be interested. Their beans have come down, and, they'll look elsewhere to cheaper prices. So we don't want to chase away the business. At the same time, we don't need to be way too cheap either. So it'll be interesting to see what it does tomorrow. This market is open with a bang, though, on Monday.
That's for sure. What other markets have you been watching today?
Cattle's now... weeks ago we were saying how the board's useless for hedging and all, because we're $14, $15 under the cash market. Now you're getting still flat curve, meaning October through February is very similar prices. Unusual to see that, but still you're a much healthier looking market. We're at cash. Futures are you can use for hedging now. So I will be on the phone for some cattle hedging. I have some ideas. Finally getting active there after this rally, and I think it's going to be really important. So that's a market that I was waiting for this to happen, or hoping it would, and now we're back with reality. That should provide some hedging opportunities going into fall. And give me a call, and I'll tell you exactly what I'm doing in live cattle and feeder cattle. But that's a market I'm excited about. Energy's had a good week last week. This week started off good on the tensions in the Middle East, keeps on ratcheting up. And now we've kind of cooled off today. So those are the two markets that have been pretty interesting, but grain stole the show today. I mean, it just from what we had on Friday, a real bad feeling. Corn had sunk, 15 cents last week. And then all of a sudden for us to spin around, get almost all that back. And then beans to go almost in the 9s on Friday morning to be 10.40. Pretty amazing turnaround in the grains. And it'll be even more interesting to watch to see if it has any follow through.
Definitely will be. On the cattle, that one does interest me because, as you said, a couple weeks ago we were saying, the board was $14 under cash, and how so who ended up being right for those who don't follow the cattle market? Did cash come down a little and the board came up, or?
Cash did come down a little bit, probably because the board was so soft. I don't think there's too many cattle out there, and there still isn't. But, things will change here in the cattle, and the expansion will happen, even though everybody says that it's different this time. It generally
it's always different this time.
Yeah, cheap feed equals cheap cattle, and that doesn't happen overnight. I am working in the back end of live cattle. When I say back end, really deferred. So if you have any questions on that, I think that's going to be super important. That's where I'm really anxious to go out well into 25 and even as some of the 26 contracts, 2026. So cheap feed makes cheap cattle. That's a saying, and there's a lot more like that. So one would expect with all this feed around for the cattle to be fed properly.
I like it. So with it being a flat board, as you talked about, is there opportunity there in the spreads? Are there, I know you can't say specifically spreads you're watching, but Are you watching for stuff in the spreads? Because it is rare to be flat this far out.
Yep. This time of year, you're looking more at the bear spreads, or it has been for the last month and a half, which haven't worked at all. It's been bull spread, and it's been obvious that it should be bull spread. Now we're back with cash. It goes more into the bear spread territory, but you got to thread that needle. For the next 2 months, that's the way it is. And then once you get past the end of October going into November, then it switches around back to bull spreads. So I would be looking for bear spreads. Probably going to go through that. The grains got me really distracted today. But I will be looking for opportunities on the bear spread side of cattle if there is anything there. I haven't even looked today. Haven't looked in about a week. But that's where I would be. But I'm still very hesitant, even though seasonally that works. I'd like to see a further rally before I'd be willing to do that, because there's just too few cattle out there to be confidently bear spreading cattle. It hasn't worked for a very long time. But, if a guy get a nice surge here this week, that's something I consider.
Yeah, I would agree with that. And keeping those opportunities in mind, you never know when they'll change either. And
yep.
As we've seen, you can have things go counter-seasonal too, so you can't just lean on seasonals.
Yeah, and that's why, again, you can even do simple strategies. Let's say you were on the fence a couple weeks ago about selling beans. You didn't have any room. Like, you can buy maybe a month worth of time, or 2 months, maybe for 15 cents. Buy a put, just in case it goes down, and I want to see what the next 3 or 4 weeks brings. There's all kinds of, again, I say shades of gray. Very simple strategies that, let's say you buy a 15-cent put and then you get a 70-cent rally in beans. 70 minus 15 cents. It was definitely worth it to do it. Again, that guy that did nothing gets more money, but then you're going to catch the markets that go down. So when you don't always have to hedge in long time periods. If you just want to see what it's going to do for the next couple months, usually that's much cheaper. But again, I'm in the gray area. I think that you need to keep the upside open on your physical bushels. Now, on the spec side, I'm definitely looking on the put side. That's where I'm looking for opportunities. I'm looking at longer time frames. I don't like anything short term. So if you want to know what I'm doing there, I'm definitely looking at stuff in beans. It was a little disappointing. I thought the puts would drop a lot today, but they actually didn't drop a tremendous amount. But I am looking at longer time periods in the beans, saying the fundamentals will matter. But again, a put's got limited risk. So even if I'm wrong, that's what you're willing to risk on it. But I'm going to use this rally on the spec side to be looking at puts. But further out and on timing, definitely give me a call. This is not a recommendation to do anything. I'm simply observing. And if you have interest in it, I'll try to clue you in on when I'm looking at doing that exactly. And then, the news can change and I can change my mind. But that's where I see the opportunity on the spec side. And the hedge side of stuff, you're looking for a place to sell grains into this. We have a lot of strategies for that too. So if you want to hear a few of them, give me a call on that. But markets that are better to work with for hedging than just going to a low price and staying down there, that doesn't help anybody out. So a lot of action here. So if you're looking for ideas, we have a few right now.
I love it. I've had quite a few questions in the past week on silver. Are you watching the metals?
Always.
I know grains distracted you today, but did you happen to look at metals at all?
Yeah, gold's been making new all-time highs, every other day it seems like. Platinum's where I'd like to, silver is a different ball game altogether. I mean, you have to like a lot of volatility, and you have to like a lot of back and forth. Silver is grinding its way higher the hard way. It's not like gold, and platinum's not been a good market either. But gold's been not vertical, but nice steady up, where silver is all over the place, and it always is. It's always that way. But it's grinding its way higher. The metals look good. Dollar's coming down. Interest rates are coming down. That favors the metals. The headwinds to the metals obviously is going to be the economy. They'll weaken up when they see a weakening economy. Lots of news out of China about the weakness. In the markets, that's why with all the South American rain, the weakness out of China, the weakness in the Chinese soybeans, very surprising to see the soybeans do this, because it's been a lot of bad news, especially out of China. So the growth side of stuff is where I would really worry about the metals. But on the interest rate side, without a doubt, interest rates coming down, the dollar coming down, metals up. And that's been the trade here for the last couple of weeks.
Makes sense. You mentioned the economy. Do you want to talk economy at all and how that's going to affect maybe
politics,
some of the things we look at?
Yeah, without a doubt, the election is going to have a lot to do with the feeling of where the economy is going. And both sides claim to have a lot of answers for the inflation, but meanwhile, that's eating away at everybody every day from every direction. And I'm sure it affects everybody in the farm to anybody listening. You're going to feel it everywhere. Grocery store, it doesn't matter if you farm, just regular families. That's chipping away at the savings rate, and it's dropping. Without a doubt, the numbers are getting worse across the board, and it's taken longer than you would have thought. But the numbers don't look good. Every category that you don't want to see getting worse is getting worse, and it'll be interesting to see what happens with vacations this year. They've been shorter time frames. Airbnb is getting kind of hurt, and a lot more vacancies than we've seen. And just right where you think people will quit spending, they have, and that should just intensify. So I see what some of these bigger guys are seeing, like the Buffetts sitting in cash, and all these guys are very wary of what's going on. That's exactly what I see. The numbers look like they're going to get worse. That's what it looks like, and that's what's been happening. So I would think it's going to continue along this path. Now, politics will have something to do with this for sure, and policies implemented. But the numbers keep grinding worse for the economy, and I don't think that's going to change anytime soon.
Well, obviously, 2008 was horrible for the financial indexes, but it was great for the grains.
Yeah, it was pulled down by the housing, and that doesn't look like it's going to happen that way this time, and it never happens the same way. This is more of a tech bubble. NVIDIA, you're starting to see numbers that don't make a lot of sense for where their stock is. And this is more of a tech bubble with, Bitcoin thrown in there and all this extra money floating around. When it finally the plug gets pulled, you'll see the tech go down first, which is what we had been seeing. Lately, it's kind of came back, but that's where you'd want to keep. That's where the money gets pulled quickest out of the tech stuff.
But does that affect the grains? Is there a reason to watch that? So yep. How do the grains typically play? Obviously, if you just take 2008, the grains looked really great, but there were a whole bunch of external factors.
Yeah, beans were very bullish that year, and they got pulled down with everything else. So what was interesting about this is when we started having those shaky days in the Dow, the grains were so short that they actually had to buy some back to get to cash. Usually they're throwing away their longs or selling it, but you actually saw the grains go up when that happened. Now, that won't happen again because they're well off they're where they were short, and it would follow everything down. But, when it first started getting rocky here on that Japanese yen trade not that long ago, they bought the grains to buy back some of those shorts to shift money around. So if the funds are net short and they have big profits, or even if they don't, if they need cash, you'd have to buy that contract back. So you actually saw buying in the grains. But if they're net long or neutral, you would expect all markets to go down. Very rarely will a market go up with the idea, the economy is imploding, this market's going to get better. That doesn't happen too often. Maybe the coupon market would be the only one that would correlate to that. But generally, everything moves in one big wad. And that's if the stock market and the economy goes down, everything else sells off. Initially, anyways.
Yeah. So it might be a good time to hedge if you're predicting a little pullback in the economy or a big pullback in the economy.
Yeah, when it did collapse in 2008, right away, everybody's like, the banking is going to collapse, and everything went to gold and silver for about 2 days, and it went spiking, and then the wheels came off completely there too. So even the safe havens get hit very hard. Bonds would obviously go up. That's a safe haven, so when things go bad, bonds go up and rates go down. But you'd see a big flight to bonds for sure.
That makes sense. Anything else you want to add today, John?
Well, it's a Monday, big Monday, big volatility. Tomorrow should be really interesting, but the charts are going to look really good on the grains, and we'll see what the rest of this week holds.
Looking forward to it. Why don't you let everyone know how to get a hold of you?
Sure, 218-731-1578.
Thanks, John.
Yep. I think that people try to save money by not buying puts, not doing that stuff, and then you get markets like this. I shouldn't have sold it 30 cents ago. You know what I mean? It's just like, you don't want to take out the upside when it could be the lows and it could be going higher.